Thank you for joining us again and welcome to the RegalX Trading Academy video course. My name is Daniel Garcia and I'm your video instructor. We are on video number 2, and on this video series today we will cover what is moving the markets. Now, of course, there's a number of issues or a number of reasons why markets move. However, there are certain main elements that are relevant and responsible for moving markets. And we want to look at the two most prominent ones today. So let's start without further ado with the very first one. Fundamentals move markets. Now, what are fundamentals? A fundamental, by definition of the word, is something essential, something meaningful, something big, and that's exactly what is meant by fundamentals. Fundamentals are news that shake the market, and there's a number of different news that can actually happen. For example, you can think of an election in a certain way in any relevant big country. But there's a lot more. So in order to keep track with these things, one thing that you can use is the economic calendar. We will touch on the economic calendar in more details in our further course. Here's an example. I pulled the main relevant dates just for the last couple of weeks. And you can see for each country, there is a very important event which is marked with 3 red exclamation marks. Here you can see an interest rate decision of the RBA, the central bank in Australia, up to earnings, average hourly earnings in the UK, for example. What's relevant for the pound or consumer price index in the Eurozone, which is these days one of the most relevant things, because anything that has to do with inflation is moving markets a lot. But there's also consumption relevant data like retail sales. Retail sales are also, at the end of the day, a driving factor for inflationary pressure. If there is consumption, retail sales will be higher. And if there's more consumption and higher retail sales, it means that there is inflationary pressure going on, which would lead to a central bank adopting a policy towards a higher interest rate on a currency, which is helpful for the currency to the upside. But apart from these main events, there is literally every day. And let's just look at this for this week. For example, you can see there's not just, or let me remove the filters for one moment. Let's remove we because there are different events that had different relevance. You can see there's a number of very small ones and others are considered bigger. For example, here is the speech of a member of the FOMC, which is the board of the Federal Reserve in the US. So even speeches of members of a central bank can be a fundamental that is driving the market. Last but not least, a tweet by Donald Trump can be considered a fundamental news impact that is very easy to move markets. Now, the next second big building block of what moves the market, remember, we talked about in the beginning, there's 2 main elements are technicals. Technicals are anything that have to do with pricing on a chart. You know, we see all these colored lines, and essentially what we see here is the price movement of the past of a certain asset. In this case, for example, the euro dollar, I was talking about the euro dollar earlier today, that while in the short term for about a few weeks, we have been seeing a massive downtrend. But when you look at on a bigger picture, you can see that it is a correction in a bigger upward trend. So we use these technicals to spot patterns, to match up current patterns with the past patterns, to talk about probabilities. So, for example, we can see now the last time the price was at the big red line, which is a moving average, which we will also explain a little bit later. It bounced off and went up. Also, we are above these clouds that are called Ichimoku clouds, which we can also touch on a little bit later. So, you know, we combine technical price levels. So basically, we're seeing them. There is a probability that the market may be rejected here and bounce back up as it did so in the past. Obviously, a current market has no requirement to do what it did in the past. Often it doesn't. But there is a certain, to a certain element, a repetitive pattern going on to some extent, because the market is not something that externally happens. It's the sum of every trader on the world trading. And basically, we all look at more or less the same kind of things, whether we agree on the same thing, whether we're seeing the same thing and reacting in the same way. That determines how coherent the actual opinion in the market is and how strong a move will be. And this is how we actually combine fundamentals with technicals. So, for example, if we have a very important price level and the market has not broken through it, and now we get a fundamental news that is a dollar bearish, then the possibility for a euro dollar to bounce off this line and continue to make a 180-degree turn to the upside is higher. And really the trick is about combining the technical aspects of finding clues in the charting with the fundamentals that enroll on a daily basis. And I invite you into our daily calls that we give. We give market videos every single trading day in order to stay in touch with the fundamentals of the market. Now, I hope you enjoyed this little video about what is essentially moving the markets. And I invite you also to come into our next video course, number 3, which will be an introduction to this beautiful platform called MT4, so that you can understand how to actually use it, how to put it in the trade and get into the action. Thank you again for joining us. Bye for now.